Good morning, our esteemed customers, ladies and gentlemen. My name is Muyiwa Oni, and I am the head of equity research for Stanbic IBTC. It is my pleasure to welcome you all to our 2022 Economic Outlook session, which we have themed Investing and Planning in an Election Cycle. I will now call on Demola Shebule, the Chief Executive of Stanbic IBTC Holdings, to give his opening remarks.
Yes, thank you, Muyiwa. Good day, distinguished ladies and gentlemen. I want to believe it's about 5 a.m. in New York, 11 a.m. in Lagos, 12 p.m. in Joburg, 1 p.m. and in Nairobi. It'll be around 2 p.m. now in Dubai and 6 p.m. in Beijing. Wherever you are connecting with us, good day, distinguished ladies and gentlemen. Thank you, everyone, for joining us today. We are really, grateful and delighted, for your tremendous support. And we are pleased, to connect with you at this point in time to discuss investing and planning as the election period, draws near. Our keynote speaker, Mr. Bismarck Rewani, the Chief Executive of Financial Derivatives Company, and a member of the Economic Advisory Council, will provide a brief overview of the Nigerian economy and the political outlook for the year 2022 and also the year 2023. There will be valuable and exciting opportunities. In Nigeria, there are no dull moments. So there will be valuable, opportunities on the one hand, and also, key risk and headwinds on the other, which, you need to consider properly as you strive to create and also extract value. Our panelists, and business leaders are also uniquely positioned to highlight our capabilities and to support diverse investment options that will aid your planning effectively for the year. It promises to be an enlightening session. Thank you once again. Back to you, Muyiwa.
Thank you, Demola. I will now set out some housekeeping rules before I read a short profile for Mr. Rewani and call him for the presentation. I think one of the key rules is that all participants will be muted throughout the webinar. So please, if you have any questions, type them in the Q&A tab. It's by my right-hand side. So you see it on your right-hand side tab. And additionally as well, the presenter, Mr. Rewani, will be making a presentation deck, and we will also be emailing that to all the attendees after the webinar session. I'll now read out a short profile of our distinguished speaker, Mr. Bismarck Rewani. Mr. Bismarck J. Rewani is the Managing Director, Chief Executive Officer of Financial Derivatives Company Limited in Lagos. Mr. Rewani has more than 40 years of experience in the financial services sector, where he has established himself as a notable figure. He began his career in 1973 with Barclays Bank in the United Kingdom, and then by 1974 he joined Barclays Bank of Nigeria. By 1976, he had moved on to the First National Bank of Chicago in the United States of America, where he served as a deputy manager in charge of credit. He then joined the now defunct International Merchant Bank Nigeria Limited in 1981, where he held the position of general manager until 1996. He has served on the board of blue chip firms such as Guinness Nigeria Limited and FCMB Group as non-executive director. He is currently a member of the President's Economic Advisory Council. He's a chartered member of the Institute of Bankers of England and Wales and a fellow of the Nigerian Institute of Bankers. I would now call on Mr. Rewani to make his presentation.
Okay, good morning. Good morning. Sorry. Good morning. We have 27 minutes. I hope you can hear me and you can see the slides.
Yes, we
Somebody
can,
come.
Mr. Raleigh.
Thank you very much. Now, I have 27 minutes to go through what could take 2-3 hours or at times 1.5 hours, but I'm going to be very brief. And the outline is this: what's the true state of the economy? And what is the context of the Nigerian economy, both globally, regionally, and domestically? What is the policy thrust in 2022, and how will it be different from previous years? Why this strategy, changing economic environment, the political outlook, which are not on the slide, but I will talk through that, and what are the opportunities. So, one, I've just gone through this outlook. Now, what's the true state of the economy? I think first and foremost, I have to share some of this, and I have to acknowledge that some of this thing came from IBTC itself, from Theodore Peter's side. Some misconception about private versus government in government consumption. The truth is that, as you can see on this slide, Nigeria's private consumption is 91.5% of total GDP, while the government is only about 8.5%. Now, theoretically, the government is not as important as this in theory, but in reality, the fiscal dominance is at least almost 10 times. So I would say that because the government has almost a monopoly of foreign exchange through the central bank, because the government has almost a monopoly of all the oil blocks through the oil sector, because the government has the ports and all that, they have what their contribution in terms of output is minuscule compared to their contribution as far as policy. You cannot succeed in the Nigerian economy without being on the good side of the government. It's impossible to be, and we've seen examples of that. Now, in the recent times, what happened was this: the subsidies were supposed to be removed in early February. They were not removed. We have an extension of 18 months. And meanwhile, we had a budget approved in which there was no subsidy. The provision for the subsidy was only for 6 months. The reality is that we now have a situation where our total expenditure has gone from 17 trillion to about 19.63 trillion. Our revenues stayed almost flat, in spite of that will change. And our deficit went from about almost 6 trillion to 8.92 trillion. These are significant. Economic reality is that Nigeria is supposed to be the poverty capital of the world. Inflation rate is at 15.63 and is expected to climb when they announce the inflation numbers in 2 days' time. Unemployment has not been done for some time. The data has not been, and now we have out-of-school children also on the increase. This is also a slide that shows some facts again from the IBTC deck. Poverty rate in Nigeria in 1980 was 27%. In China, it was 88%. Today, poverty rate in China is 0.6%, while that of Nigeria has increased. But one thing is clear also, which is not on this: the income per capita in Nigeria 30 years ago was 2 times or 3 times that of, in 30 years, 3 times that of China. The Nigerian income per capita was about roughly $1,800 or something like that. And China was about almost $500 or $700. Today, the Chinese income per capita is over $10,000, while that of Nigeria is at $2,000. So from being 3 times higher than the income per capita in China 30 years ago, we are now 1/10 that of China. China has a higher population. What have they done? They've had increased productivity. They've used state capitalism efficiently. That is it. While ideologically you have the free market and you have state market, they've been able to overcome the management problems associated with state capitalism and make it efficient. Could it be more efficient? I definitely believe so, but that's where we are. This is another chart that is important when you want to understand the Nigerian context. In 2015, there are only 2 points that are important here. In 2015, the number of people working in Nigeria, gainfully employed as done by the International Labour Organization, 73 million people were, no, 68 million people were working, fully employed in 2015. And in 2020, it has dropped by more than 50%. Only 31 million people are employed, fully employed in Nigeria. Meanwhile, the population has increased, right? So that is the other thing. Population has increased. The number of those fully employed have reduced by 50%. And you know what you have? That's why you have people kidnapping and all. Youth unemployment, of course, we all know that. So there's no point dwelling on the facts. Another major thing that we need to think about is that this chart as well from IBTC says that the amount of income that people spend on food. In the United States, people spend 10% of their income on food. In the United Kingdom, they spend 9% of their income on food. In Nigeria, we spend 101%. That means average worker, if he earns 30,000 naira a month, he spends 31,000 naira on food. Okay? So it's likely to be in difficulty. Now, the government, only a few are sharing the national cake. This is the slide also from IBTC, which shows that you can see all the workers waiting for the crumbs, and then the politicians and the businessmen are eating and throwing the crumbs there, and these ones are waiting. It is this crowd under there that got into the NSAS looting thing last time. Now, what am I trying to point out here? A precarious financial position. The financial position is precarious. Oil prices have increased by 62%. As a matter of fact, $94 a barrel. But the currency since 2015, the currency has depreciated by 239%. The balance of trade has depreciated by 35%. Gross external reserves have gained 40%. But our international debt has increased by 201%. So, what do we have? We have a situation now where that government is desperate. The shortfall in government financing cannot be fixed through subsidy removal. So we are now using any means possible to actually kind of fix the debt. All right. So taxes, you can see now there's a new tax, carbonated drinks. There's a new tax. I mean, the tax, and we're going to discuss that a little bit. Tax on government securities, apart from the federal government bonds, and now the tax-free status and shelter has been removed. That's very serious implications. GDP is growing, just like every other part of the world. After COVID, there's been base year effect. Now, what is going to take us to that level? We are projecting this year maybe 3.3%, which will be almost equal to the population growth rate. But we'll come and talk about that in a few minutes. Nigeria is dependent on strategic investments. The investments are low. As a matter of foreign portfolio investments, we have a reversal of flows. And it's going to get worse as the interest rates in the US, the UK, and Europe increase. Inflation everywhere. Inflation here, inflation there, inflation everywhere. So what are we saying? Nigeria 15.6 with the US 7.5, 5.4 for the UK, and so on. But what is interesting is in the rest of the world is about 40-year high, 30-year high. Nigeria's inflation is just at the same level as it was maybe a year ago. So, but it depends on what basket you are using. Nigerian basket was last reconstituted 2009. If you change that basket tomorrow, we may have different outcomes. Sure, what? So, but even though inflation is increasing, we are seeing interest rates on government securities decline. I think at last count, 1 year was 5.2%, and 180 days and 90 days. Right. So when you see that, and you find that, and even those treasury bills that you were getting tax shelter on them. Now the tax shelter has disappeared. So effectively, the appetite for treasury bills will dissipate. And when that happens, it means that when treasury bills are not taken up, it means the central bank is going to be funding that gap. And if they fund that gap, that's the other thing we call ways and means advances, which is printing money. I'm not going to bore you too much on the jargon, but we all understand that there's a fiscal challenge. But the fiscal challenge becomes more overwhelming or bewildering. I don't want to use the word overwhelming, because When I hear $95 a barrel, or $4 a barrel, wow, that'd be great news for Nigeria. But then, government not bringing in that much revenue. Nigerians, the tax paid by Nigerians is not that high. Why? Because you tax profits, not losses. So whilst MTN and Dangote Cement are making a lot of profit, the small and medium scale enterprises are not making that much. So this is what I'm just showing about NIBOR. We also have what we call a distorted yield curve. That you have the same federal government risk in the OMO, same federal government risk in the primary market, and all sorts of promissory notes, all with federal government paper, attracting different discount rates in the market. So there's that distortion. It's great for arbitrageurs or treasurers who are smart, but for those who want to stay in the legitimate business mode, we have to now begin to look at how best we can do this. So what do we expect in 2022? This is very important. Here I'm going to touch on a number of things. One, in the short run, we think that oil prices will go as high as God knows what, but then we're going to step down. Why do I say they will not stay that long? Yes, this graph shows it goes all the way to 88. I am not that optimistic. My personal view is that for the middle of the year, we're going to see oil prices come down to about 65 or even 60. I say this because, one, the Iran deal, the conversation has started, and therefore there will be some rapprochement there. I believe that Ukraine is all hot air, that I don't think it's in Putin's interest to move in there. What has been shown is that it could, but the consequences and the PR will not be that good. So let us assume that there's a diffusion of tension in Ukraine. Let us assume for once that there's a rapprochement with Iran, the nuclear deal. What will happen? Iran will bring in another maybe 1 or 2 million barrels of oil. OPEC will release some more oil, and then, but will this oil supply increase be enough to meet the demand, which is going to come up as we have, like the United States? I think New York and a couple of states now have now dropped mask requirements. Denmark has dropped mask requirements. The UK has dropped mask requirements completely, and Switzerland stopped mask requirements today. That's Monday today. So I can assume that by the end of February, almost all the states in the US would have dropped mask mandates. So in that case, without masks, with herd immunity, I think they have enough people who have either been infected, vaccinated, boosted, or all of the three. There's herd immunity. Therefore, COVID or the current variants that we know, which is the Omicron, the others, are not going to pose so much of a problem. So they're not going to pose so much of a problem. I think that what we are going to see is that we are going to see growth in demand and be managed by the growth in supply. That means that the oil price, even at 90, will come down, but gradually to about 90, to about 75 and all, and that is fair enough. So now, so that's very important for us. But the bad news is that no matter what the oil price, our production is suffering because of militancy, vandalism on the pipeline. But that creates a fiscal problem, a foreign exchange problem, a reserve problem, and a naira weakness problem. Okay? Then this is your cross-sectional reserve. The cross-sectional reserves have gone high. It's now down to 39.5. It will go down a little bit more. And but our debt has increased. Now our problems are simple. That oil price up, production flat or down, but also there are leakages in our system. Therefore, we will not see a strengthening of the currency. And RENCAP last week announced that their fair value estimate, and they are very good at this, Yvonne Mahongo was there, was about 480. She believes that 480 the market will clear at start when you do static equilibrium analysis. But if you move forward, it could appreciate or depreciate. But let us use 480 as fair value. If 480 is fair value and you are at 412 and the portfolio and airline ticket exchange rate is about 444, it means that you have a 40 naira depreciation in the FPI market and you have a 60 naira, 418 to 420, almost a 60 to 70 naira depreciation in it, and also an appreciation from 575 to 480. So 100 naira appreciation in the parallel market, 70 naira appreciation from the official rate of 415, 416, and the 40 naira depreciation, 70 naira depreciation in the official market, 40 naira depreciation in FPI and foreign, and 100 naira appreciation. Therefore, you can see that concentric move. That's what is expected. I just talked about that and we'll cross this now. Now, what next? With CBN has announced that they want to stop selling money. Basically, they want to move from an auction to an interbank market, which is the first step towards convertibility. But everything is predicated on one, expecting $200 billion of export proceeds. But the bad news is that our total exports in 2022 is estimated about $61 billion, of which only $7 billion will come from non-oil and gas sources. How you move $7 billion to $200 billion remains to be seen. But anyway, it's aspirational. So, again, I've told you fair value, according to RANCAP, fair value, if you are taking a crawling peg method, fair value will go from 415 to 425, 430. And the parallel market will only appreciate to about 550, 540 in that short window. But if we go the whole hog, okay, we take the official market to 480, we see the parallel market also appreciate. So inflation is going to go down, up, and then down again towards the end of the year. Okay? Fuel subsidy removal will bite us, but I think eventually they're looking for ways and means. Why is there inflation? Mainly food. And why? Food because of exchange rate pass through to imported food items. And when imported food items increase in price, the cross elasticity pushes up the domestic substitute. That's what we are seeing. Besides, the price of diesel today, okay, that is exceptional. The price of diesel is 400 and whatever it is, 430, I think. It used to be 195 about a year ago. So it has doubled. And it's diesel that powers the trucks that carry the food. So we are beginning to see some tightness. Food inflation is becoming a real. Today I had a meeting with my colleagues, and we're talking about some restaurants have increased their prices by over 100%. So, because we are running out of time, there are new taxes, new energy costs, high liquidity in the system, and we're going to face higher debt service pressure. Now, what does all of this mean? In the equities market, the companies that have bought their fixed assets when the exchange rate was friendly, i.e. Guinness, Nigerian Breweries, those who expanded their plant, those who brought money in under the rights issues in the past, all of that, are taking the upside. So you can see those companies rally, their stocks rally, and their performance go through the roof. While the companies that are on a marginal cost basis, pricing their things on a mark-to-market basis, are also beginning to take the hit. So what are you going to see? Those companies that can use cost efficiencies. For example, the Dangote refinery cost, which is 45% lower than other costs because of technology. However, Dangote is buying his foreign exchange at today's prices, and therefore they will net off. And I'll tell you one thing that scared me over the weekend, I found out that the price of fertilizers have gone up from December 1, from 10,000 a bag to 16,000 a bag. And you know what that means? It means that when the price of fertilizers go up, then as an input into the farms, the farmers are going to have to push up their prices. So while officially it looks as if inflation is going to moderate, I cannot see how this would change. But the truth is that if they use fertilizers properly, technically speaking, the output for the farms should increase. That increased output should be able to bring down prices. So it's a chicken and egg situation, but we'll see what happens. Now, banking. This is where it gets very interesting. The banks have always made money, mainly from having, because of liquidity management, they have to buy treasury bills. The treasury bill income revenue is all tax-free. Now that the tax shelter has been taken away, so you will find that the effective tax rate, right? Going here, the effective tax rate of a bank, in other words, if MTN makes 200 billion and pays 31% effective tax rate after capital allowance, if the bank makes 200 billion naira and has 100 billion naira in revenue write-off, you'll be taxing that bank on 100 billion naira, not 200 billion naira. And the 30% of 100 billion naira will be 30 billion, as against 30% of 200 billion naira with 60. So there'll be a 50% tax savings. And therefore, and that goes to the PAT. It is from the PAT you pay dividend. So all the banks are going to be, every bank in Nigeria, every insurance company, and every asset management company, and also every pension fund administrator will be in difficulty. So what are we expecting? Nigeria is on a fiscal cliff. Subsidy will not be removed. Plan is now to remove it in February after the elections, before the swearing in. But if the election is rancorous and people are protesting all over the place, and you throw into that protest a fuel price increase, nobody will take it. So my guess is that no matter the outcome of the election, people are going to say no, 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 no. And therefore, you will not be able to do anything until after swearing in of the new president. Okay, so the shortfall in government financing can only be fixed by subsidy removal or increased borrowing. But what's the snag about borrowing? The snag about borrowing is twofold. One, international interest rates are going to increase, whether we like it or not. Dollar interest rates are going to increase 4 times this year, even in every way you look at it, because inflation is a real hydra-headed problem across the world. When you now try to borrow domestically with low interest rates, you will cause inflation and weakening of the currency. I think that the central bank will be hard put not to increase interest rates in March, the MPC. And therefore, if they did that, if they increase interest rates domestically, then the debt service in local domestic debt service, international debt service will increase at a time when we are spending money for election and all sorts of transactions. So this is just how sustainable interest and consumption. But I'm going to break it down. Now, one, if you increase interest rates, you will increase the marginal propensity to save, reduce the marginal propensity to consume, and Nigerians will be spending less on consumption items and putting more into savings. But you can only save that which you have not consumed. Difficult. In the current situation, with the salaries and wages we see, the way I see it, it will be difficult to even get by, not to talk of saving. How people are going to be living, because we are, every one of us, everybody, top, like they say the rich also cry. The top, the bottom, and the elites, everybody is facing the diesel price. Everybody is facing spare part price on cars. Everybody is facing the new price of cars. Everybody is facing, it is just a nightmare out there. But it's you cannot increase wages. If you increase wages at this time, you will also do now. So if you look at the newspapers today, ASU has given a deadline, Pegasus, all sorts of things. There's a labor strife. Why? Because the government is in a weak position politically right now. They cannot do it. As you know, the elections on Saturday, even the municipal council in Abuja went to the opposition. The last week Saturday, the municipal council is where the villa and the National Assembly. So one cannot guarantee any political outcome. And I'm going to take a few minutes, which is not here, to discuss the political situation. We have conventions coming up this month, and there are people who are going to court. We have conventions. The two main parties, the PDP and the APC, have conventions. They've not come to terms on the zoning. They've not come to terms on the candidates. Quite frankly, we are exactly less than a year. The general elections on February 9 next year. Today we are February 14. So we have basically 51 weeks to the election, and yet no conventions, no primaries, no candidates to run a complex country like Nigeria. Every Tom, Dick, and Harry, there's an article which I suggest everybody should read, which is every Tom, Dick, and Harry. Every Tom, Dick, and Sister Harriet wants to be a president in Nigeria. I think by Sonola Olume said yesterday. You must read it. It's very, very important. Okay. Now, In the meantime, because we are borrowing, and the Nigerian government, I understand, is going out to raise additional money, another $2 billion, $4 billion from the Eurobond market. One of the parties went to raise money at 7.5%, and the market already factored the fact that there will be an increase. No matter what you do, and even some of the banks who have Eurobonds maturing are going to have to retire these Eurobonds, one, with more expensive Naira, and two, more expensive dollars in the Nigerian market, and higher interest rates on the new coupon rates. So that's the situation. Now, let me go back to the political case. The political case is this. Because of technology, you will find that ballot tampering will be reduced. You will find that the number of voters ghost voters will most of them will disappear. But these are out of cycle elections. You're seeing Abuja, you're seeing Edo, and you're seeing Anambra. When you have elections everywhere in the 774 local governments in this country, whether INEC or the police, or for that matter, everybody will be able to manage it, one cannot guarantee what the outcome will be. Because that doesn't mean that at that time Boko Haram or bandits are not going to be having activity. So what do we see? One, how does Nigeria want to deal with the zoning problem? Two, how does Nigeria, who has a management problem rather than just a political problem, what are they going to be doing? What are they going to be doing when it comes to dealing with the politics, dealing with insurrection and political misunderstanding and political violence? So it's a thing that we have to look out for. But hopefully, think that you will have the APC have their convention, and some people will get angry, the disgruntled will splinter and go away. The PDP will have their convention, the disgruntled will splinter away. Then there will be an alliance of the disgruntled coming together to form a third force, and then a fourth force. So in the end, you are going to have maybe 4 political groups vying for power, fragmented, and then you end up probably with an Israeli type of coalition. So if there's no clear winner in the first round, then there'll be a coalition where they will march together. Another thing to look out for is this thing about what they call consensus candidates. Consensus candidate works this way. Before consensus candidate, we can come together in a room and everybody shouts. Now, the new constitutional amendment is saying that every candidate must sign off. It must be unanimous. So if there are 40 candidates, all of them must agree that this one out of the 40. And you know what that means? All those 39 people will have to be motivated, right? And the last minute somebody will pull out and say, no, that is not enough, I want more. So again, like I said, it's easier to put 50 flies in a marriage box than to get 5 Nigerian politicians to agree on anything. Now, another thing that is worth looking at is that if the government says, I can no longer run the country, and I'm going to give everybody oil to share, you would have, in Saudi Arabia, every Saudi Arabian will get $23.20 a day. Every American will get $2.40 a day, and every Nigerian will get 80 cents. Annualized, and today the price of an hamburger, Super Mac or whatever it is, Big Mac is $5.23. So you can't even buy, to take 15 Nigerians to come together to buy one hamburger. Now, what are we seeing? We are seeing federal government imposing taxes on bonds and short-term securities. We have discussed that. And I mean, there will be a supplementary budget because the revenues are going to increase and expenditure is going to increase faster than revenues. Now, how will that affect you? So for corporates, it doesn't really matter. Only the banks will be affected negatively by the tax shelter. Investors will be affected because their returns will be. Then, of course, consumers will be affected. This is the profit before tax and profit after tax of these companies. And you can see that the effective tax rate of First Bank holding company is 22.8 as against 30%. For UBA is 15.2. For GT is 14.8. Access Bank 9.8 and Zenith. So you can imagine if all of these people now are going to be 30% because the treasury bill revenues are down. So I think we ought to know that we have other things on policy, Twitter, and all that. What's the strategy? There's poverty is rising. So how do you sell goods into a market of poverty? But one thing I must point out very quickly, because we're running out of time, is that there are 54 countries in Africa, of which 6 or 5 effectively under military rule. One is tottering, that is Guinea-Bissau. But 5 of these are in West Africa, of which here is West Africa. 25% of West African countries are under military rule right now. Okay, so all of them are French speaking. So all of them are French speaking. The World Bank projects annual inflation of 10% in 7 countries, including Nigeria and Ethiopia, leading to rising costs of living. Now, there will be tight elections in Kenya, in Angola, and Nigeria in 2022 and 2023. And African countries will push for climate change, and these are just key risks. But the major risks to us in Nigeria are, 1, population growth and 5 of the fastest growing cities in terms of population in the world are in Nigeria. And they are Abuja, no, of course, number 1 is Nnewi, 29.6, Abuja, 28.4, Uyo, and I think Port Harcourt, Onitsha and Port Harcourt. Port Harcourt then before Onitsha. So we have a population and urbanization problem. There is also, but it's also an opportunity in terms of selling into the urban markets and consumer goods for e-commerce. Now, I'm going to skip the IMF article 4, which everybody knows what has happened. So what are the opportunities? 1, ICT. You can see that 5G, storage, cloud computing, and all that. So you can imagine what's happening to the telcos, MTN, Airtel, and all of them for that matter. Telco infrastructure, main one, and all of these people are there. Then the fintech space, they are cannibalizing the banks on transaction banking, and all of that will be very, very interesting. Now, construction, because of elections are coming, affordable housing, civil construction and roads are being concessioned, and I think concessional agreements have been signed. Those roads are going to be completed, and you are going to see them secure the roads and collect tolls. That will also help, including the alternative roads. So you have construction, then you have financial services, which we talked about, which is also about financial inclusion, and microfinance bank space, insurance companies as well. Insurance has a big upside. Manufacturing and agriculture. So agric, because of the agric processing, agric value chain, agric storage, post-harvest losses, fertilizer, a lot of opportunity in fertilizer space. Manufacturing for fast-moving consumer goods, Nestle, Guinness, Unilever, Cadbury, and Nigerian breweries. Textiles coming, there's a value chain there, but we'll leave that for now. Are there risks? I'll end up here. Big risk, a sharp fall in the price of oil could happen, but it's not likely. An increase in price of oil to 150 is a risk for Nigeria because it leads us to what we call ideological backsliding and reduces governance and accountability. Will there be a widespread outbreak of COVID? No, we think that's COVID is gone or is about going altogether. Social unrest because of high unemployment and poverty level, that is a high risk. You can see it's a time bomb. Debt crisis, no, Nigeria will seek to restructure and refinance their debt. So they won't fall off the debt. Nigeria will not fall off the fiscal cliff, but we have to borrow at and refinance its borrowing at higher rates. Insecurity and terrorism, yes, that one because of economic insecurity, but more from elections. So scenarios, we've said delayed reforms. Could there be a military coup in Nigeria? Not likely. And financial sector crisis, unlikely. Okay, so in summary, and I'll end up here, GDP growth will be slow and remain positive. The political situation will remain on close watch. New taxes will come in, but will be taken in slow doses. Headline inflation will maintain an upward trend for a long time before coming down. CBN to adopt unorthodox, but will come back to orthodox monetary policy. You've had the comments coming out from the central bank that they want to stop, they change the foreign exchange structure. Inflation will force an increase in the monetary policy rate and something on CRR as well. So oil prices will stay above 80 in the short term, but then at worst to come down to around $70, and that's still positive for Nigeria if the monies are coming in. External reserves will deplete as CBN uses it to support the currency. Currency crawling peg short term will go from 416 to 420, 425, 430. But if we buy the bullet, we'll go as much as 480 and bring the market into equilibrium. Thank you very much, ladies and gentlemen.
Thank you very much, Mr. Iwani, for the insightful presentation and also showing clients the opportunities and how to position through the election cycle. I will call on Bridget Oyefeso Odusami, Head of Brand and Marketing of Stanbic IBTC, to moderate the panel.
Thank you, Muyiwa. Yes, thank you, Muyiwa, and good morning to all of our esteemed clients on the call, almost averaging 500 at the moment. Mr. Riwani, thank you so much for your insightful presentation. At this time, because we know who we are at Stanbic IBTC, we are actually very proud that we are an end-to-end financial services solutions provider, and all of the opportunities Mr. Riwani has highlighted in his presentation. I will have our executive directors speak to what we offer as Stanbic IBTC, our capabilities to support the diverse options of investing to aid you, our clients, as we all plan towards this election cycle. First of the executive directors will be Mr. Eric Pajemisi. He's our executive director for corporate and investment banking. He will talk through the opportunities in his space, and we'll move on to other executive directors. I will introduce them as they come on. Thank you very much, Eric. You have the virtual floor.
Yeah, thank you, Bridget, and good morning or good day, everyone. Thank you, BJ, for your very insightful thoughts, especially around inflation. I guess the work ahead of us is to see how we can get our clients ahead of the curve. This is definitely not the time to be keeping money away and get worked out by the inflationary trends across the world and Nigeria in particular. So I think it's the conversation is how do we make the investments in the right areas? Obviously, there will be a bit more risk, but how do we hedge those risks and mitigate the impact if they do crystallize? So I think for us in the CIB, we serve a wide range of clients, corporate clients, both domestic, international, across public sector and multilateral agencies. We do have deep specialist sector expertise in a couple of sectors, as Mr. Riwani has pointed out, in the oil and gas, power and infrastructure, telecom and mining sectors, which we leverage on our group heritage and also on-ground expertise in over 19 countries. We have diverse product offerings. I think the most critical in this point in time will be around our advisory businesses, because we see quite a lot of corporates looking at the next level and the next step on how to grow. So our advisory businesses, just in terms of business combinations, your business structuring, and the opportunities that are prevalent in the environment, we are very happy to bring those to bear on your businesses. And in case there are needs for financing, we do have very strong expertise in project financing, real estate financing, acquisition finance, and even if it was to raise money both through the debts, public and private markets, and the capital market for equities, we have very strong execution capabilities in these areas. We also have excellent working relationships with multilateral and credit exports facilities, relationships that we can source appropriate types of funding for you. We will not leave out the fact that being a member of the Standard Bank Group, we have a broad range of capabilities in currency management, whether it's local or foreign. We can do that for you. We have very structured and innovative solutions across multiple currencies, which are tailored to meet the individual requirements of the corporates. Currently, we can settle in 20 African countries, and we have the ability to provide pricing also in 40 of the 54 countries on the continent. I think I'll wrap up just to speak a bit more about what Mr. Rewani mentioned, the sectors opportunities, where I particularly like the slide on ICT. We see the 5G licensing, and I mean, there are tremendous opportunities in that ecosystem when you look about the downstream. And if you look at the profit surge percentages, 70%, I think that's something that we are very happy to go into with our clients. Construction, we are all Nigerians, we know how that happens. We see there's going to be a lot of cash flows flowing through that, and that will feed through to agriculture and logistics, and also export-oriented activities of our clients. These are very significant opportunities, and we are happy to go along with you on that journey. So, Bridget, I'll stop here and I'll hand back to you. Thank you, ladies and gentlemen.
Thank you. Thank you very much, Eric. And to our esteemed clients, like I said, we have a huge portfolio of products and services. So remember, just before I move on to Bumi Dayo-Olagojo, Executive Director for Client Solutions, please remember that we'll be taking questions right after this session. So we have 3 more Executive Directors speak to you. Please pop your questions in the Q&A box. It's clearly written Q&A. We'll be taking all the questions right after the talk by the Executive Directors. Okay, next on, like I said earlier, Bumi Dayo-Olagojo will be coming on next. He is the Executive Director for Client Solutions, and she'll be talking through all of the capabilities and opportunities that we have within the client solution space. Over to you, Bumi. Thank you.
Thank you, Bridget, and a very good morning to everyone on the call, our esteemed clients. A lot of food for thought and even food for action from Mr. Rewani's presentation this morning. I'll just pick 2 areas of interest from what he's talked about and unpack the opportunities that we see. And the first is on the rising taxes. He touched on the resumption of taxes for corporate, state bonds, etc. He also mentioned the sugar tax, digital tax. So a rising tax regime we're rolling into. And the second is on leveraging technology and digital innovation. The opportunities we see as we go into the election year and even beyond, firstly is the need to establish a future fit business structure. Increasingly, we've seen that using customer data and records in a creative way to pull out the opportunities therefrom is increasingly important. Improved customer data and records are a must-have as we structure a future fit business. There are many benefits. They span, for example, being able to provide being able to access a broad range of funding opportunities because you have a rich core that can be looked into to fit or to solution for your unique business. It also helps when you look at the kind of campaigns you want to drive across your customer base, so improving the kind of results that you see from your loyalty campaigns, or even from a tax compliance perspective. As the tax pressures in the environment increase, we think it's an opportune time for you to relook your capital structure towards arriving at an optimal mix between equity and debt, so that you're creating more value within your business. So you begin to ponder questions around, should you introduce debt, and up to what quantum that would still make it attractive to you from a tax savings perspective. Even as individuals, it's an opportune time to evaluate your investment alternatives, looking at the net tax inflow, and bearing in mind these changes that are coming from a tax landscape. Again, depending on where you sit on the spectrum, the resumption of taxes may bring an increased cost or an increased debt financing cost to your business. So it's also an opportune time for you to evaluate your portfolio, especially where you have maturing instruments in that portfolio. The third thing we see is around partnerships. And for us at Stanbic IBTC, it's very clear to us that partnerships are the future, and indeed that future is now. So working with you, we can look at and assess what type of partnerships can help to facilitate your business going strong into the election year and even beyond. For instance, recently working with clients, we've been able to bring new solutions to the table. You would, for example, have received some communications from us around a partnership where working with Intelligra, working with an MTN, for example, we have been able to make it easier for SMEs and individuals who desire to have a smartphone to run their business or to use for different purposes that facilitate their dreams. We've been able to bring that closer to them, put it in their hand, so to say, and at an affordable rate and pace, that matches or suits their cash flows. So another example is a partnership in the healthcare sector, where our aim is to bring the needed access to basic healthcare at a very pocket-friendly price to our client base, to employees of our customers, and to family, and so on. So if you're not doing so already, if you're not partnering already, it's a good time to think about how you can, through partnering, complement services that you offer and position your business to, take in more of the value chain in the market. The fourth is related to the technology and digital innovation that Mr. Irwani talked about. And we see four key things, opportunities in this space. One is how you are leveraging digital distribution as a major game changer for your business. This is an opportune time to do so, given the increasingly mobile penetration that we're seeing. These days, giving attention and focus to bringing your marketplace or your products or your produce, your services closer or literally in the hand of your client base is increasingly important. And we have e-commerce capabilities that can help you and support your dreams, your business in this area. Eric talked about savings. In fact, your savings can work better for you when they're invested. Where the interest rate regime we enter into, interest rates rise. Yes, if you're sitting on the spectrum where the rise in rates benefits you in terms of better returns on your fixed income securities, all well and good. But it also presents a good opportunity for you to pick up bargains in the equity market, to enter into some sectors where the entry point is now attractive, it's lower. Some of the sectors Mr. Irwani even touched on during his presentation. Portfolio diversification is key. Where possible, for instance, if you're attracting foreign currency-based revenues or flows, this is also an opportune time to look at your portfolio to achieve an optimum balance, introducing FX-based securities in a manner that provides support for inflationary risk or even currency devaluation risk. And lastly, when you think about the heightened political risk or even the implications on insecurity or social unrest, ensuring your various assets is important at this time. So it's not a case of, oh, I should have, had I known. This is an opportune time to ensure those assets that you hold near and dear. So in summary, it's a time to look at your optimal capital structure, a time to think of how partnerships can benefit in helping you capture more value from your ecosystems or your customer base. It's also a time to unlock opportunities from your customer activities, your customer data, and then also giving focus to portfolio diversification to help address headwinds. So please do speak with us today, and we can work with you in these various areas and more as we help to facilitate your dreams. Have a very refreshing Valentine's Day. Thank you.
Thank you, BDO. We seem to have forgotten that it's Valentine's Day. Happy Valentine's Day, everyone. All right, thank you so much, BDO. So we have our next executive director, Remy Oswago, and he's the executive director in charge of business and commercial clients. So we'll be yielding the virtual floor to him to take us through the capabilities, the opportunities, products and services within the business and commercial client space. Thank you very much. Remy, over to you.
Thank you very much, Bridget, and a very warm welcome to our highly valued clients on the call. My colleagues who have spoken before me have covered quite a lot. So perhaps what I'll do is narrow down on one of the key strategic sectors that Mr. Rewani had identified as an opportunity area, specifically the agriculture sector. Now, he talked about the, anticipated rise in interest rates. What that means and the implication of that on cost of financing is very clear. And wherever our clients play in the value chain of the agricultural space, whether it's inputs, whether it's producers, whether you're a processor in the distribution value chain, the implication of high cost of funds cannot be overemphasized. And so the institution, Stanbic IBTC Bank, has taken a number of measures to see how we can support clients in this area to make sure that they are able to operate and able to access support in terms of funding at the single digit pricing for this. So when you look at some of the things we've done, we've partnered very closely with the CBN, where there are a number of intervention funding that is available to support what our clients that play in the agribusiness value chain. These include the commercial agri credit scheme CACS that is created to finance activities across the entire agri value chain. There's also the Real Sector Support Fund that provides long-term funding for the real sector and agri. Here funding is again provided directly by the CBN through the banks, of which Stanbic IBTC Bank plays a very key role for our clients here. There's the maize aggregation scheme, again targeted at processors and poultry operators who are able then to utilize this funding to stock maize for their activities. We also have the private sector-led accelerated agriculture development scheme parts. Here, this is focused mainly on development of contiguous farmlands towards commercial crop production. There's the paddy aggregation scheme to provide working capital for rice millers to stock rice paddy. The non-oil exports simulation fund is another intervention fund that is available. Here, it is targeted towards developing non-oil export with focus on the country's export commodities like cashew, like sesame, like cocoa, and the rest of them. There's also the Anchor Borrowers Program, the Prime Anchor window, which is targeted at financing backward integration structures for primary production in the agri space. And then of recent, I'm sure a lot of people are aware that the CBN launched the 100 for 100 scheme to finance or provide financing for 100 companies within 100 days. The businesses that are targeted here cut across the real sector, agri, healthcare, and all the rest of them. All these intervention funds are at single-digit rate, which will, of course, be very beneficial to our clients that are operate within the agribusiness value chain. Now, for any reason where there's a client that is unable to access these things, one of the things that Stanbic IBTC has also done is to partner with the Nigeria Incentive-Based Risk-Sharing System for Agricultural Lending, NISAL, which is a wholly owned CBN institution. All right. The key purpose for setting up NISAL is to provide credit risk guarantee for lenders like Stanbic and IBC Bank, and also incentivize borrowers through its interest drawback scheme. Via this scheme, it pays a rebate on interest. So when clients borrow on commercial basis or on commercial terms and apply for NISAL guarantees, they are then able to get a rebate. These rebates range from 20 to 40%. The credit risk guarantee cover for institutions is 30 to 75%. Stanbic IBTC Bank actually has a partnership right now with NISAL that is valued about 50 billion, through which we are able to support clients that again play in the agribusiness value chain. So we are doing all these things because we realize the importance of the agri sector to the economy, and we are very willing and happy to provide support via this means to all our clients that play in that sector. Thank you very much for listening. Bridget, I'll hand back to you at this stage. Thank you.
Thank you very much, Remy. And I think that there are a couple of things that I know that our clients, are now privy to, and they will take great advantage of the opportunities. Thank you so much. There are questions coming your way, Mr. Riwani, and to some of our executive directors. But once we round up with Olumide and Muiwa takes the key takeouts, then we'll delve into the question and answers. So please be patient with us, our esteemed clients. We're almost there. All right, next is Olumide Oyetan, and Olumide is our Executive Director for Stanbic IBTC Pension Managers. So he will take the virtual floor now, and we will come back to you all. Thank you. Olumide, over to you.
Thank you very much, Bridget. Good day, esteemed clients. Thank you, Mr. Ruwani, for an excellent presentation. I think my colleagues have spoken widely about some of the opportunity, but I will come on the micro level and just, try to share how we should be navigating as from an investor point of view. As mentioned, the backdrop is quite challenging for the country, whether it's you look at it from a fiscal standpoint. But what we always advise is that focus on the long term, but discipline about when you're looking at your overall investment portfolios. Within the group, we have vehicles for short, medium, and long-term investors. So whether you're tactically positioning in our asset management business, you could use a short-term money market fund while you're maybe looking for other opportunities. Or, for instance, you wanted to go into equities. We also have an equities brokerage business as well. So there are some sectors that have been highlighted, within the presentation. So as an investor, you could take advantage of that. So the ICT, the telcos, for instance, and we see that, the environment with, COVID era, work from home, and the opportunities that has created. Yes, there was a health challenge as well. So, just unpacking all that. Also, as long-term savers, you have to see what more can I be doing to optimize, perhaps my retirement savings account on the pension space. There's the opportunity of voluntary contributions, which people can use to top up, their retirement savings and augment their retirement balance. The truth is that we need to put in a lot more, but there's that pressure. So you need to both be, investing for the short term on a tactical basis, while you're also doing that on a long-term basis, just to ensure that you do have enough to draw on as well. Within the group as well, we do have the traditional asset classes, equities, bonds, fixed income, but also we do have alternative outlets as well. So last year we launched an infrastructure funds for people to participate in. If you have, a certain amount of net asset, but that gives you opportunity to participate in the real sector. Mr. Rwani mentioned, all the infrastructural spending, the tollings of roads, modular power producers. Those create an opportunity to invest in, and that is what that particular fund will be looking to harness those opportunities and to deliver above inflation rate returns. My colleague also mentioned foreign, hard currency investment opportunities. So, for instance, we do have a dollar mutual funds that one can invest in if you do have hard currencies, and that will help bridge some of the pressure you face. But you see, in an election year, I think that as a cycle, an election year come and go. But the most important thing is that as partners, we are here for the long term. I think one of my colleagues, Bumi, also mentioned, risk management tools. Insurance is critical. Whether as you look at it, the security situation, civil unrest, and just ensuring that you also have yourself protected, adequate protection is important. I think the other thing that I would just also like to mention is that within the pension space, even if you have a small business, the micro pension has created an opportunity for small business owners to participate in the pension scheme. So, we can hold your hands, navigate you, because that long-term savings is what will ensure that people have a meaningful life, post their work life. And the truth is that, no matter what we do, whether we are business people and we hustle through our careers, there will be a point where we can no longer work. And that is when that savings become extremely important. So, succession planning, you have your business, who is going to ensure that that business succeeds you. We have mechanisms and products in place. Please chat to us. Even just looking at simple wills, for instance, as well. So because we don't want a situation where people become stranded and your loved ones that you have, you can't seamlessly, transition assets to them. And those decisions must be taken responsibly now, today. So it's about planning for today, but more importantly, as a business, we focus on long-term sustainable partnerships. And we continue to look for those opportunities that ensure that, we can give you the very best while managing the downside risk that we know, is everywhere within the economy. I think on that note, I will stop, Bridget, to hand over to you. Thank you.
Thank you so much, Olumide, our Chief Executive, Stanbic IBTC Pension Managers. So pardon me where I said Executive Director earlier on. Thank you so much. So at this point, distinguished clients, thank you for being patient. And I'm sure that there are many things that you've taken up, but Muyiwa Oni will gladly help us wrap it all up nicely with the key takeouts before we now dig into your questions and provide the suitable answers. Thank you very much. Muyiwa, over to you now.
Thank you very much, Bridget, and thank you very much, distinguished panelists. Thank you for the excellent delivery and showing the capacity of Stanbic IBTC Holdings in driving the growth of our clients and demonstrating how we assist our clients navigate these uncertain times. There are a few key themes that stand out from our conversation today. I think if I start from Mr. Rwani, I think he showed some opportunities which we think our clients should take advantage of. So if one starts from sectors like the creative industry, for example, there are strong prospects there around the entertainment industry, around the fabric and apparel industry as well. And if one looks at conventional sectors like construction, there are clearly opportunities there with housing, manufacturing as well, showing strong opportunities. The ICT and in particular the fintech sector are areas that we've seen growth and opportunity. And I think what is clear as well is that there are risks still navigating this environment. And I think a key one he highlighted was the insecurity in the country. So that still remains a downside risk. As we approach elections, delay in reforms becomes real as well. So there was the conversation around delays in the implementation of the subsidy removal. And it's easy to see how this continue to build up as we go into the elections. But some positives still, with herd immunity building up as well, that clearly reduces the risk of COVID infections due to economic activity. So if you look at what we're seeing globally, the global economy seems to be picking up in spite of COVID numbers as herd immunity improves. And I think what exciting data I saw in the presentation as well was the fastest growing cities, where we saw 3 Nigerian cities coming in that top 10 growing cities within Africa. And so for our clients, those are cities and markets where you could see growth in products and services. And if I move on to conversations from our executive directors and this CEO of our pension business, I think one overlining theme is that our engagement with our clients, we see it as a partnership. And so we are clearly willing to walk through that journey. And so from Eric talking about the advisory business being critical to supporting our clients and looking at opportunities within financing, either through capital markets or on balance sheet, those are areas that we continue to see to partner with our clients. Bumi highlighted that ability and focus on being future ready and driving strategy through data, through technology. That is critical. Remy talked about the agriculture sector and how, as a business, we continue to show our clients how to source financing, discounted financing that the central bank has shown, and central bank continues to provide, with Olumide also talking about the investor perspective and also partnering with our clients to achieve their long-term objectives and long-term investment plans, and the products the bank has to address both short-term objectives and long-term objectives as well, and having risk management underlining the whole investment. So I will pause now and hand back to Bridget to handle the Q&A session. Over to you, Bridget.
Thanks. Very well done. Very well done, Muyiwa. Very well done. Thank you so much. Okay, at this time, we'll be going into the Q&A session, and we have a couple of questions. So within the timelines that we have, that time permits us, we will take the following. And this question really goes to Mr. Riwani. I think one of the questions that is posed to you is, you said that the average Nigerian will spend 101% of their income. What is the economic and social implication of this?
Okay, let me take this. I say historically, Nigerians are spending, average Nigerian is spending, or the Nigerian at the bottom of the ladder is spending 101% of its total official income on food compared to other countries. Therefore, whatever they spend on food, and food inflation bites more on these people. The implication is that people are substituting. So if you are buying, let me give you an example. The price of flour 2-3 years ago was 8,500 a bag. It's now 22,000 naira a bag. Fertilizer, I said, was 10,000 in November. It's now 16,000. So not to talk of sardines, not to talk of eggs, not to talk of beans and all of that. All of those things have jumped. So what are they doing? They're switching to substitutes, and they're actually reducing the amount of food they're consuming. The NBS study last year showed that 25% of Nigerians are consuming less in quantity than what they were consuming earlier. And I think about 50% are consuming less in quality than they were consuming earlier. What has that done? It has compromised their immune system. It has also made them more fragile for other reasons. Okay, so technically speaking, companies like Nestle, Cadbury are now using sachets rather than tins of Milo of sachets, so that what we call miniaturization. People are now selling smaller packs, and even schools are now allowing people to pay monthly rather than per term, because it's not only the price, but the fact that you have to pay in advance, which is killing people. Landlords are saying, go and bring 2 years, 1 year, but people cannot afford it. Okay, you pay 6 months, so you pay one. So all of this is because it's the credit overhang, right? And the price are inflicting people, right? Many people, because for schools, you actually pay in advance. You pay for the term that you have not used, right? Therefore, you are paying 3 months in advance, right? And the people don't have money. That's why there's a dropout rate and children out of school. But some people have now started the monthly pay, some of them weekly pay for schools. It's more administration, but at least it's less impact and it's helping society. So basically, when I talk about consumption, I'm talking about consumption of food, yes, but then you take it in the wider context of healthcare, education, and all that, you see that there's a lot of pressure on people because of what is happening.
You off. I think I have some questions for my colleagues, but there was another question that was put forward for you and was asking what the impact, if any, with the commencement of the Dangote refinery. Can you hear me? Yes. So
Okay.
Asking what the impact will be of the price of PMS in the Nigerian economy with the commencement. And I think there was another question, sorry, one more, just tied to the Dangote refinery. Do we have any timelines as to when it will be ready? You know, it's another question coming through. Thank you.
Let me answer the first one, the easier one. It is being speculated that the Dangote refinery will start in Q3 this year. I am very conservative about that, so I would say I believe that you are going to have it rolling out maybe in Q1 2023. Every time engineers and contractors tell me that they will deliver something on a party, I always give myself at least another 2-3 months of space. Hardly have I been wrong in terms of that. So yes, maybe they have assured the promoter that they will deliver a third quarter. But I think that to be on the safe side, as Nigerians, we should expect it to happen on the first quarter of 2023. 1. 2, what does it mean? We don't have the pipelines and the other infrastructure. So Dangote's refining technically and theoretically is outside Nigeria. It's an export processing zone. You have a port, the deep sea port, where the tankers will take the refined products. So rather than Trafigura and the Glencore and Vitol buying from Rotterdam, they'll buy from Dangote and ship those things to Atlas Cove and also Port Harcourt and Bonny, right? So there's not that much, because normally what we do, we give them 450,000 barrels, they take it out, process it, and bring it back in, right? So that we call it swap arrangements. So rather than giving the $450,000 to barrels to the refineries in Europe, we'll give it to Dangote. Is Dangote going to collect his money in Naira? I doubt it, because Dangote has costs and everything. So let us assume. But the savings are this: rather than shipping a tanker from Rotterdam to Nigeria, right? You'll be shipping it from Lekki to Atlas Cove. The savings also is that Dangote's refinery is about, they say, 45% more efficient than cutting-edge technology. Therefore, it will reduce the cost. But to the extent that the price of oil has increased by more than that amount, so we will not see. Nobody should expect that Dangote refinery is going to make petrol cheaper. It's only going to make it more available at a point in time. 2, that Nigeria's crude will be sent by pipe to Dangote refinery very quickly, rather than, so the time we used to use to send it out to Rotterdam and then bring it back, that would be safe. But quite frankly, the way it is now is that the logistics is simple. We've not had shortage until this ethanol or methanol thing had come. So I think it's quite clear. This is very clear that will it solve our foreign exchange problem? Not that much, because it doesn't change much. Because oil that you would have exported, the 450,000 barrels you would have exported, you would have earned dollars, right? So those dollars are what you use because you're getting crude out, refined in, right? So the crude that you sent out is dollars that you would have got. The refined product that you could have got in has been offset with the dollars you would have gotten from the export oil. In other words, I sold $1 million of oil to Shell, and Shell refines it and sells me back $1 million worth of refined products. It nets out. So nobody should say that, because I've heard so many places saying that, oh, we spend all our money importing fuel. No, it is our own crude that is being refined for us. So it's the cost of refining that is the problem. So that cost of refining will now reside in Aliko. So Aliko Dangote gets that cost of refining and it becomes a Nigerian. Apart from that, I don't think there's any more difference. But availability will be there. The price differential will be probably some cost, transportation cost and efficiency cost in the Dangote refinery, but it's not going to change dramatically our foreign exchange situation.
Thank you. Thank you so much. Just some quick comments. There's a feedback form in the chat room. Please, dear clients, take a minute or so. It won't take more than a minute or two to complete it. We'll be circulating the presentation right after this meeting to everyone who confirmed attendance and who is present here in the chat room. We have a few more questions, but we also have very limited time as we wrap up. I'll quickly pose this, and it can also go to one of my colleagues, and it's from Agogo, and it's asking about, between short-term and long-term investments, which of them will we recommend? And it's a simple, which one? So Bismarck can respond, Muiwa, and then Bumi as well. Please, if you would like to take that question first, between short-term and long-term investments, which would you recommend?
Let me make a comment. An investment strategy is not a binary choice or between one and the other. You have a portfolio. Part of it, depending on your needs, part of it will be invested in long-term instruments. Here you can get some capital appreciation, some pickup. If, for example, you bought a fixed income security and interest rates were high, when interest rates drop, the price of those securities will increase, and you get some. Those are interest rate sensitive assets. Then you have some which are just earnings driven. So if you bought some equities, so I don't think it's either or. It is just what kind of portfolio mix would you have, and what is ideal for your situation. If you have children going to school and you want to pay their school fees, then you tie the majority of these things to, that's the way I see it. Thank you.
Thank you. Bumi, do you want to add what we have within our portfolio as a reminder, quick reminder, that in terms of short-term, long-term, and obviously depending on what position you are in your life circle as you're growing, as you're investing, like Mr. Iwani has highlighted. Would you like to please take us through? One minute. Thank you.
Thank you. And thank you, Mr. Iwani. Very spot on. It does depend on the risk appetite of the individual and the time frame of what you want to achieve. So it is tailored to meet your needs. In terms of solutions that we have available to address those needs or to cater to those needs, it spans fixed income securities like our mutual funds, some special purpose fit for need in terms of what you want to do, whether it's save towards starting a business or going on a holiday or doing a new launch. We also do have bespoke portfolios, which again can be customized to suit what you want to achieve, and we work with you over the short and long term to achieve those objectives. We have funding solutions. So in terms of access to capital to expand your business or to start a business, we're increasingly making that access broader and closer to reach and convenient to use and to repay as well. So a whole range to work and suit your various needs. Planning also, even when you think about your estate and transferring your wealth to the next generation or to your target beneficiaries, or whether it's to secure, like we said earlier, certain properties, or even when it comes to personal insurance that you want to consider. Quite a lot in our bouquet to address each and every area. Like Bridget said, end-to-end financial services, and these days we are going beyond financial services to other areas that complement your everyday life, even beyond financial. So we look forward to engaging you. Thank you very much.
Thank you, Bumi. I think at this point we really have only room for one more question, and seeing that agriculture is really topical within our economy at the moment, I would like Remy to answer the question posed by Reginald, asking, will agriculture and agro-allied industrial loans be given priority at Stanbic IBTC? Remy, please answer that, if you will. Thank you.
Thank you very much, Bridget. It's not a question of will it be, it is already being given priority in Stanbic IBTC Bank, actually. We do have sector expertise in the agribusiness space. We have a very strong agriculture desk within the bank. We have a well-articulated and properly defined agriculture risk appetite that is in place within the bank. And the records show that in terms of successfully helping our clients access this intervention funding that we had spoken about earlier, we are among the top players there. So agri-related lending is a priority focus area for Stanbic IBTC Bank. Thank you, Bridget.
Thank you, Sir Remy. Distinguished clients, at this point, we would not be able to leave here if we take all the questions. But rest assured, we will definitely get answers to as many as we haven't dealt right now. I will be inviting our Chief Executive for Stanbic IBTC Bank, Wole Adeniyi, to please give us his closing remark. Once again, we thank you for spending your morning with us, morning into your lunch hour. We're really grateful, and we hope that the insights will be taken into consideration as you build your business for the year. Thank you very much. Wole, over to you. Thank you.
Yeah, thank you, Bridget. Once again, we'd like to express our gratitude to everyone for being part of a very insightful discussion on the 2022 economic outlook, investing and planning in an election cycle. We are indeed very grateful to you for taking your time to be with us this morning and this day. We are indeed at a critical junction, facing both unprecedented challenges and unique opportunities with a chance of widely contrasting future. Some of the main issues addressed today were imposition of new taxes in an already tough business environment, headline inflation expected to maintain an upward trend, pullback on reform to heighten investor challenges. Creative solutions were discussed today which offer much hope for the future. And at Stanbic IBTC, we have framework in place to help you achieve sustainable development. We look to continue to establish practices and find ways to scale them. We must ensure that the engagement and participations of all is embedded into the permanent and far-reaching structures and institutional frameworks. Through partnerships in Stanbic IBTC, we will work differently with you, taking advantage of the immense opportunity to use new technologies and platforms to facilitate this collaboration. Ladies and gentlemen, we cannot stop the future, but together we will rise. At Stanbic IBTC, we say it can be. Thank you once again for attending our Economic Outlook session. Thank you.
Thank you. Thank you, Wole. And thank you once again, Mr. Riwani. At this point, we would really be closing the meeting. We really hope that you had a great morning with us. and we're looking forward to your business in the coming weeks, months, and years ahead. Thank you very much. Have a good morning, everyone. Sorry, it's afternoon already. Pardon me. Have a good afternoon and the rest of your day. Thank you.